Well, jolly good day to you, chaps and chapettes. In this rather spiffing newsletter, we shall take a gander at the state of the old residential real estate market prices, please, as of the days of the dawn of July 2023. That is a right treat, I tell you, with active listings showcasing the seller's eagerness to part with their abodes and the days of the market signifying the buyer's readiness to take the plunge come August 2023. But oh my dear, there seems to be a bit of a lag in these statistics today's market, doesn't there? Now, on the nitty-gritty, prices are still marching upwards, but not quite at the breakneck speed they were before the interim peak in June 2022. Quite a curiosity, I must say. Nationally and in places like sunny Florida, they've even managed to surpass those dizzying heights of June 2022. It's like a topsy-turvy roller coaster with an unaffordability index hitting record highs, transaction volumes plummeting to levels reminiscent of the 2008 crash, mortgage applications hitting a 40-year low, and listings, days on the market, steadily on the rise. The wise old pundits are blaming this peculiar price surge on a lack of inventory. But would you believe it, the inventory is now nearly as abundant as it was prior to that interim market peak in June 2022. Quite a head scratcher, I say. Now, this unaffordability index business is a bit of a puzzle calculated by considering home prices, interest rates, and income levels. Since the pandemic, home prices have shot up by more than 20% for a number of years, fueled by government stimulus, no less. Interest rates have climbed from a measly 3% to a rather eye-watering 7.5% despite a low unemployment rate. Wages have struggled to keep up with the home price and interest rate shenanigans. The United Auto Workers are even staging a bit of a ruckus, demanding those hefty wage increases. But truth be told, it's a tad unlikely that such wage hikes can be sustained across the economic spectrum, even if the bigwig companies give in. Large-scale pay rises could also stoke the fires of inflation, making the Fed think twice about reducing those interest rates anytime soon. But fear not, my dear readers. A return to economic growth rates of 4% or higher might just be the ticket to sort out this muddle. The good old US of A has been chugging along rather nicely thanks to consumer spending. Unfortunately, those consumers have dipped into their savings and maxed out their credit cards, all in the name of keeping the economy going. Meanwhile, our pals in China and Germany seem to be having a spot of bother with their own economies. So the prospect of a roaring economic growth under the current administration doesn't seem that rosy at all, I'm afraid. But here's the rub, chums. Real estate cycles are a long-haul affair. We might just be in for a spell of sideways market meandering for a good many years, with home prices taking a tumble when sellers are forced to part ways with their abodes due to job losses, business woes, or a somber event in the family. Or brace yourselves for a fast and furious economic recession, Jamie Dimon's financial hurricane on the horizon, mind you, that could lead to sharp uptick in unemployment, folks losing their cushy 3% mortgages, and prices returning to the mean. This, in turn, could give the Fed a green light to start trimming those interest rates. Now remember, my dear friends, all real estate is local as a cup of Earl Grey tea. So, do click on your state below and get the most updated statistics for your local property market. Cheerio! The real estate market in Arizona remains balanced. The active listings are continuing to decline, but flattening out above the mean since 2019. Sellers are not running for the exits. The days on the market representing the buyer's sentiment are above the mean since 2019 and seem to be moving away as they take a breather. Prices continue to increase, but not at the same intensity as before. Active listings are down 37% for the year, down 0.4% for the quarter, and up 5% for the month. Days on the market remain 20% above a year ago, up 4% for the quarter and up 2% for the month. The result is an annual price decline of 7%, but up 3% for the quarter and up 1% for the month. The color coding for Arizona indicates a more red than green, indicating a weakening market. Are in the market for a mortgage, please go to our website and click on the pre-qualify button to get pre-qualified, or apply online seamlessly, or even go to our calculator where you can see how much mortgage you can afford. Then please like this video, subscribe to our channel to not miss any real estate or mortgage information, and click on the notification button.